And just to start by welcoming you all once again to what I believe is going to be a very important, I believe is an important discussion on deepening regional economic integration through cross-border payments, fintech, infrastructure, and policy coordination. The importance of economic integration for Africa in Africa is not a new concept. For decades, Africa has spoken about integration. We have signed treaties, we have established regional economic committees for years, and most recently, as was just recently said, we have launched the Africa Continental Free Trade Area, which, as we know, is the largest trade area in the world by number of participating countries. But the reality is that we tend to have done the, should I call it the paper part of building this market. We seem to have moved a lot faster. You can say building this market on paper faster than we have been able to build the systems that allow that market to function. So as a result, today, a business can legally sell goods across African borders, but often cannot pay or receive payment quickly, cheaply, or even predictably. And also they have difficulties also getting payment or paying in local currency. A truck will find it easier to cross a border faster than a payment. You have situations now, a digital entrepreneur may be able to build a Pan-African platform, but still faces dozens of licensing regimes across various African countries. And these are not isolated problems. I believe they are symptoms of what the paper presented describes as a systems integration challenge rather than just a trade challenge. And I think this paper presents an important insight. It argues that the next frontier of African integration is no longer merely reducing tariff. That's one of the things he ended with very clearly. It is building interoperable payment systems. It is harmonized regulation. It is building resilient digital infrastructure, trusted data governance, as well as coordinated institutions that are capable of allowing trade, finance, and technology to reinforce one another. And indeed, empirical evidence that was presented in the paper suggests that countries around the world with stronger digital ecosystems consistently achieve stronger regional integration outcomes. So this changes the whole conversation around economic integration. Because if the argument is that digital integration has become one of the strongest predictors of regional integration, then it means investments in payment systems, investments in fintech, in digital identity, in broadband infrastructure, and regulatory coordination can no longer be treated across the country as just mere sectoral policies. It means they have become or should become continental economic strategy. But deeper integration, if that's our goal and should be our goal, also introduces new questions. How do we ensure this interoperability without sacrificing sovereignty? The presenter mentioned PAPS. I remember PAPS has been there for quite a lot of time. We're only hearing about it a lot more recently, but PAPS has been in operation for several years. And when we go around different countries, we found that losing sovereignty was an issue. Many of these countries understood the importance, how relevant it was, how valuable it was. But the simple question that was preventing it from being used was countries did not want to give up what they perceived as a loss of their sovereignty. So how do we do this without sacrificing sovereignty? Another question we need to ask, and maybe our panelists should look into, how do we encourage innovation without increasing systemic risk? We know that systemic risk has increased significantly, particularly in recent times. How do we harmonize regulation with respect to national realities? The 54 countries in Africa, they are very different. They have different histories. They speak different languages. They have different peculiarities. They have different cultures and so on. How do we pull all this together at the same, very different countries and situations without, while respecting the uniqueness of these different cultures and countries. How do we ensure that smaller economies benefit just as much as the larger ones? You know that saying that when they say no policy, there are always winners and losers in every policy. No country wants to be one of the losers. They all want to be winners. How do we ensure that the smaller economies that are more vulnerable benefit as much as the largest ones? Because if you cannot ensure that, you'll find that many of them would not be willing to integrate. And perhaps more importantly, how do we ensure that Africa builds one integrated financial ecosystem instead of 54 digital connected islands? Now, I'm making a distinction between the two. There's a difference between an integrated financial ecosystem and 54 digitally connected countries. Most of our countries are digitally connected. You can transfer money across countries currently, but are they connected? And I think the goal should be building an integrated African financial ecosystem rather than just having all the 54 countries digitally connected. That should not be the goal. These questions, to me, have become even more urgent as the global economy today is being reshaped by geopolitical fragmentation, by technological disruption, by supply chain realignment, and growing competition for investment. So in this new world, regional integration is no longer simply about competitiveness like we have been told for many, many years. It is increasingly about resilience. I believe that Africa now has an opportunity to leapfrog traditional integration pathways, not by simply replicating what other regions did decades ago, though, of course, lessons are important, are useful, but I think it should be more by designing a digital financial architecture that's actually fit for the 21st century. But fortunately, we have an exceptional panel here who I believe's collective experience spans policy, regulation, academia, international corporations, payments, innovation, as well as private sector execution. I want to start by allowing each of our panelists to give their opening intervention, their opening remarks. I would encourage all of our panelists to keep their opening interventions concise, please, less than 5 minutes. I wouldn't want to have to stop you while you are speaking. I will stop you while you are speaking. Those of you that remember me will know I was very controversial as Taishan General. So I would not hesitate to cut you off like I always did for 10 years when I was at the job. So please keep your remarks concise, straight to the point, so we can conclude this, so we can leave enough time for what I believe is the more valuable part of this session. That's a robust conversation among the panel and, of course, the audience on this topic. Starting with Professor Aremu.
Thank you. Good afternoon to each and every one of us. My assignment is to see how we can assist the weaker countries so that they can participate on the cross-border payments. Let me say that there are two cross-border payments that are emerging in Africa. One of them I participate in very well at ECOWAS Commission, and that is ECOWAS Payment and Settlement System. By 2027, our head of state in ECOWAS, they signed that into law, that our single currency, which is ECO we are talking about, will actually come into effect via the payment system. But while we were doing that, AfCFTA, they came up with another payment system, which is for the continental payment system, and that's the Pan-African payment system. So in the end, these two payment systems is expected to fuse together, in which the regional payment system will fuse into the Pan-African payment system. There are quite a lot of other regional blocks out of the 8 blocks that already have theirs. Now, not going to that history, what is my assignment here? How can weaker countries be able to enjoy cross-border payment, whether it is EPSS for ECOWAS or it is for the continental payment system. There are about 7 points I just want to mention within the time given to me here. Number one, regulatory and legal technical assistance. Many of our countries today will need assistance, even including Nigeria, that may have talked that they are doing very well. No, in the area of aligning our payment system, in line with that of ECOWAS and AfCFTA, there are certain obligations we need to meet. Then modern payment systems have to be developed, electronic transformer acts have to come up, electronic signatures must be there, data protection has to be there, cyber security, and quite a lot. How do we get this one done? There may be need for technical assistance from World Bank, from African Development Bank, from ECOWAS Commission, from AfCFTA Secretariat, and all other institutions that are development partners. Secondly, the payment infrastructure at national level, we are talking of AGS and RTGS, need to be developed and be operational. Luckily, that is okay for Nigeria, but for other African countries, that has to be equally done to be able to participate very well. But for the cross-border payment, there's need for support of integration into PAPS, that's Pan-African Payment and Settlement System, as well as the EPSS, Equal Payment and Settlement. So thirdly, there is need for digital infrastructure development, and he mentioned that, that's our moderator mentioned that one. You know, several of our member states, we face a lot of digital infrastructure, and therefore the issue for national broadband expansion, the issue for rural internet, because we want to cover everybody, don't want to leave anybody out. And then the issue of fiber optic backbone and cloud infrastructure, public infrastructure, as many as other things have to be put in place. Number four is institutional capacity. What I mean here is that all the institutions that have to participate under the cross-border, there's need to give them assistance. And I'm talking of Central Bank itself, Ministry of Finance, Ministry of Industry, Trade and Investment, and up to that right to the telecommunication, NIPC, so many other institutions, there is need to actually give each and every one of them the adequate and proper training that is necessary to participate. Then the next one is the Fintech ecosystem development. Quite a lot of our financial technological instrument ecosystem, they need assistance also because they are the branches that will actually allow the payment system to reach all the unique components of our national economy. More important, number 6, is the issue of SME readiness. I heard this morning, the number of SMEs that are in Africa, and they issue constitute about 90-something% of the companies in some countries. Therefore, if AfCFTA is going to work, if cross-border is going to work, then our payment system must be able to reach them. There must be enough training. There must be e-commerce readiness. There must be digital financial literacy. There must be trade financial awareness, all through them. But let us take note that special attention must be paid to women and youth because we already have a protocol about them. And they equally consist of substantial people patronizing the SME. Custom digitalization, I don't have to mention that, you already know that one. At the touch of a button, customs should be able to do their job without too much hassle. Also, number 8 is interoperability assistance. The ability to connect all the relevant institutions in this particular platform is very important, and we are talking of the issue of upgrading the single window system to be able to make sure it interacts effectively. Not only that one, there is need to put in place even multimodal transportation system that will enhance the movement even of the product. It's part of the thing that have to be done so that the payment system we are talking about will allow goods to move and payment will move. In addition, human capacity. We cannot but develop the human capacity of our national economy and our regional economy very well because they are actually the one that will be able to do all this kind of arrangement without much problem, including judiciary, legislators, everyone that's involved, so that they're able to know what their role are under a cross-border payment, either ECOWAS payment and settlement system or the Pan-African payment and settlement system. There have to be what I call targeted financial support. You see, there's a lot of financial support that are necessary if all those institutions, all those personalities that have to operate to be able to make sure that the cross-border payment is effective, there may be some assistance. Such assistance can come from African Development Bank Infrastructure Fund, ECOWAS Regional Development Fund, After Adjustment Facility, World Bank Digital Fund Project, IMF Capacity Trust Fund, and quite a lot of others. So if we make ourselves available to all this, I think weaker economy can actually participate very well under the cross-border payment and settlement system.
Thank you very much, Prof. That's a very, very long list of. When I was sitting down listening to you, I was a little bit concerned. I mean, if you list all the things that need to be, it sounded more of like a laundry list of what, in particular, Nigeria needs to do. But the truth is, many of the things he identified cut across most of the 54 countries, and they have to do it simultaneously. Even if Nigeria gets its own right and the other countries, they don't. So you can imagine how much work that needs to be done. But thank you very much, Prof, for your opening remarks. I'll move next to Mr. Etokpa for your 5 minutes or less comments, please.
Thank you very much. I got down some points from the presentation, which I think is very important for us to discuss. And one of the points that I got is the issue of digital infrastructure that is not even in Africa. It's very important because all the African countries are not operating on equal pedestal. That's very key. Yes. Right? Okay. Yeah, so one of the things that I took from the presentation has to do with the uneven digital infrastructure in Africa. And it's very, very important because all the countries in Africa, the central banks in Africa are not operating on equal footing. Some countries are more developed in terms of digital penetration. It's very important that we solve that problem. If we don't solve that problem, cost of doing cross-border transactions will be extremely high. There's another point that he made, which I think is very vital we should take away from here, and that is to say that Africa trade less with itself. For me, that's a shame. We have all the potentials in Africa. And that brings me to the various bodies that are saddled with certain responsibilities, and all of them are needed. AfCFTA is one. AfCFTA is also another body that will be needed in solving this equation. The African Union Committee is also one, and then the regional economic committees. All these four entities will be required in trying to solve the problems of digital penetration and economic trade in Africa. For the AfCFTA, it will basically be setting the rules and coordinating and harmonizing policies, because I think it's the only body that has the approval of the 54 head of states to present one African market. And so it has the impetus to connect and coordinate all the policies within African countries. If, for example, Nigeria has a KYC requirement that is not agreeable to Kenya, Africa has to come in there and make sure that we harmonize our regulations. The Afrexim Bank will provide liquidity. It doesn't have the impetus to summon any African country, but it has the liquidity, it has the infrastructure. Already it owns PAPs, and it's already operating PAPs. And some of the African countries are already connected. What we just need to do is to latch on that and provide the needed trade infrastructure that we need. Many countries in Africa are already participating actively. The countries that are not participating, that is where AfCFTA has to come in. And in a very subtle manner, mandates that everybody connects. And at the end of the day, we'll be working towards having a single currency. The African Union will then have to come in where there are internal corporations, where there are external legal issues, international corporations with other countries like the US, China. They will come in there and provide the umbrella body. So the AfCFTA, Afrexim Bank, and the African Union Commissions are very vital if we really want to solve the infrastructure problem in Africa. If we really want to be trading amongst ourselves, we must demonstrate value. We must have to present value. One of the reasons why some of the African countries have resorted in not connecting to PAPs to do cross-border transactions is the provision of liquidity. And that is where Afrexim Bank has to again be reminded that it's going to play a very vital role in ensuring that all African countries are connected to this one infrastructure that will enable African communities to trade with itself, lower cost of transactions, and also guarantee the African sovereignty. Thank you.
Thank you, Mr. Etokpa. There's one question I was going to, from what you said, that I think is very important with them to ask. I think you are trying to, I think I like the way you tried to break down responsibilities in terms of who needs to act. I think it's a question I'm going to come back to later, but I think I will just first of all, move to Mr. Cardoso, not the one we know at Central Bank, the other Cardoso, to please give us his opening remarks. Please, 5 minutes or less. Thank you.
Thank you. Thank you very much. First of all, thank you for inviting me. I've told this to some of my colleagues of this panel. I'm the only one that is not Nigerian in this panel. And not being Nigerian, I'm also a Portuguese one. Let's say, coming from a former colonial power that was probably the greatest one in the 16th century. And we were in these vicinities. We more or less stopped in Elmina when he found the gold, and then go on to the south, to the Indian Ocean, passed through Mozambique, and by the way, I'm also Mozambican. I have the two nationalities. I lived there for 33 years, and I continue to go there. And I lived the 10 first years of independence. So when I speak about Africa, I'm not only an European. I also have in my cutlets, in my ribs, the smell, the sound, and the feelings. And having said that, I would say that I was seeing somebody there filming, and I read in the back, Zulu films. And I thought, Zulu? And then I remind me that Zulu are a nation that descends from the Bantu. And the Bantus were originated in southeastern Nigeria and western Cameroon, and gave rise to nations like the Sena in Zimbabwe and Mozambique, the Tsonga in Mozambique, the Xhosa and the Zulus in South Africa, and many others, the Tswanas, and Makuas in Mozambique, which is the greatest ethnic in Mozambique, where I grew. So I said, look, well, I'm Nigerian also. I'm not, of course, I'm not descendant, I'm white. But then we, the Makuas, are Nigerian. So my first point is to say just not when you, Nigeria, you are not only the ancestors, the origin of the Bantus. You are also, in the northern part, the origin of the Hausas, and later on of the Sokoto Caliphate. And in the southwestern of the Yoruba kingdoms. So Nigeria is completely central to the history of this continent. And maybe when you invite Mr. Donald Trump to come to Nigeria, you can remind him that, just for him to feel, well, I could not begin without saying this. I'm sorry. I like you.
Thank you, Mr. Cardoso.
Let me begin by thanking the authors. I will take 4 minutes. Let me begin by thanking the authors of the background paper for this panel. I fully agree with its central message. The African continental free trade is about much more than trade. It is about industrialization, infrastructure, finance, digitalization, and Africa's place in a changing international economy. Allow me, however, to approach regional integration through the lens of political economy. My argument is a simple one. In a world undergoing profound geopolitical and geoeconomic change, Africa's central challenge is to build capable and resilient states and development strategies that reflect domestic realities and respond to changing international and regional conditions. Development is the objective. Regional integration is one possible instrument. Let's remember this. Confusing the two risks expecting from regional institutions what only effective domestic governance, state capacity, and productive transformation can deliver. Historically, this distinction was less apparent. Pan-Africanism gave continental unity an extraordinary political significance. It inspired the struggle against colonialism and affirmed the dignity and sovereignty of African states. The legacy deserves recognition, but history moves. Today's priorities are state consolidation and productive transformation. Development does not begin with treaties, declarations, or institutional blueprints. It begins with capable and resilient states, effective domestic institutions, productive firms, education, infrastructure, and investment. Regional trade cannot expand in the absence of tradable goods, and no single institutional model can adequately respond to 54 different realities. African countries are also diverse in their political economies. Some continue to rely on rent-based systems of governance. Others have advanced further in institutional consolidation and productive transformation. Many continue to confront conflict, chronic insecurity, or weak state institutions. It is therefore unrealistic to expect a single development strategy or a single model of regional integration to fit all. History itself offers no universal model. Europe integrated after developing productive economies under exceptional political circumstances, post-war reconstruction, determination to prevent another continental war, and unprecedented American political and economic engagement during the Cold War. East Asia followed a different path.
Mr. Cardoso, please, 30 more seconds, please.
Sorry?
Can you, we need just 30 more seconds, please. If you could round up in 30 seconds,
I can't
please.
stop yet.
No, you can round up in, you can round up in 30 seconds. Thank you, Mr. Cardoso. You will notice I gave Mr. Cardoso a few more minutes after the 5 minutes. For two reasons. I think he was offering a very interesting, from a non-African perspective. And secondly, I'm not sure his relationship with the central bank governor, and I wanted to ensure that I'll be allowed to leave the building today. So I gave him a few more minutes. But thank you, Mr. Cardoso. I think you are making a lot of very interesting points that we'll get into during the Q&A. So please just keep those thoughts. I will get back to you. Next is Mr. Nwosu. You are most likely not related to the governor, so I will not give you more time than is allotted. So can you please, your 5 minutes, actually 5 minutes intervention, please. Thank you.
Okay, thank you very much. So, good afternoon, distinguished guests. I'll be speaking from the Fintech perspective. You know, the truth is that Africa has never lacked ambition for integration. We have agreements, we have trade protocols and initiatives, such as the African continental free trade areas. Yet, despite all these efforts, only about 16.84% of African total trade occurs within the African continent. This raises an important question. If the ambition for integration exists, what is preventing that ambition from becoming an everyday economic reality? The answer increasingly is that integration is not simply a trade problem. It's an infrastructural problem. A business can have a legal right to trade across borders, but that opportunity means very little if they cannot easily pay its suppliers, receive payment from its customers, access to reliable connectivity, navigate customs, or operate within a predictable regulatory environment. In other words, Africa does not only need agreements that connect markets, we need systems that make those connections work. Payments underpin almost every part of economic activity. They support transportation, logistics, commerce, salaries, supply chain, and small businesses. When payment systems are reliable, accessible, and secure, they make the wider economy more efficient. For us, At Pampe, we therefore see our role as extending beyond simply enabling transactions. We are helping build the digital rails that allow individual businesses to participate more confidently in the formal economy. For us, inclusion is particularly meaningful because out of every 4 Pampe users, 1 identified that Pampe is their first bank account. That is more than financial access statistics. It represents what becomes possible when people who may previously have been excluded from the formal financial system gain access to reliable financial tools. And behind every transaction is the real economic activity. A small business owner paying supplier, an entrepreneur receiving money from a customer, or an individual using digital finance for the first time to make greater control of their economic future. That is why scalable fintech infrastructure supported by digital literacy, agent and merchant networks, and accessible tools has an important role to play in bringing financial services closer to underserved communities, helping small businesses move from cash into digital economy. The next frontier, however, is moving from financial inclusion to financial integration. Africa operates 54 countries, 42 currencies, and more than 30 instant payment systems. The opportunity is therefore not simply to connect more people to financial services, but to connect African market through financial services. Imagine an MSME in Lagos sourcing product from Ghana, or maybe from Kenya, or maybe from Zimbabwe, or any other part of Africa. The real measure of regional integration is that a business can pay its suppliers, receive money, manage currency conversion, and ultimately grow, employ more people, and serve more customers across Africa without unnecessary frictions. As payment system becomes more connected, so do the risk, cybersecurity, threats, fraud, data protection challenges, and digital exclusion. As access expands, protection must also expand. This is why consumer protection, transaction monitoring, identity verification, and cybersecurity cannot be treated as a secondary consideration. They are foundational to future digital finance. As regulatory harmonization is particularly important, this should not mean lowering standard. Quite the opposite. We should work towards common robust standard for KYC, for consumer protections, data governance, financial security, so that consumers and businesses can enjoy the same high level of protection wherever they transact. Ultimately, regional integration should not be measured only by how easily companies can expand across borders. It should be measured by how much easier we make it for Africa business owners to buy, sell, receive payments, grow, create jobs, and improve lives across continents. At Pampe, we continue to strengthen Nigeria payment infrastructure so that micro, small, medium enterprises and consumers can transact with greater confidence and participate more fully in digital economy. Because Africa's next phase of integration will not be built by agreement alone. It will be built by systems that make those agreements work. Thank you very much.
Thank you, Mr. Nwosu. We are running a bit behind on time, so I'll go quickly to our final panelist, Ms. Folashade Femi Lawal, for her introductory remarks.
Good afternoon, distinguished ladies and gentlemen. I'll stand on existing protocol. The good thing about being the last speaker is you just collate everybody's contributions and just add yours. But we are blessed to have an esteemed panel of experts. I'll just add 1 or 2 things to layer all that has been contributed today. We have all established the fact that Africa does not have a demand problem. We also don't have a payments problem because we know Central Bank is doing a great job with that. We have payment system departments and several other departments weighing in. What we need to face is the reality that we are fragmented across Africa. And we must always remember that Africa is the new frontier. Africa is the new gold. The entire world is looking at Africa and what can come out of Africa. And so we can't fail the generation coming after us by paying lip service or just talking about documentation and all of that. We've done that through the years. We have made some progress, but that's not enough. The next generation is looking for us to solve the problem. And the question we're asking ourselves is, what problem are we solving? It is scale. And that scale is determined by how we can reduce the fragmentation. Today, unlike the developed countries, African payment flows is still spread across many small corridors across the world. And that gives us heavy dependency on correspondent institutions to support us with our cross-border. That needs to change because we are big enough to solve us. So the part I will come in will be, the goal is equal opportunity, not equal outcomes. What Nigeria can do is different from what Ghana can do. And so we mustn't measure results by who does the most transactions. It should be access. How many Africans across the spread have access, equal access? We should divorce ourselves from the outcome. What our focus should be is to drive that access. The next generation will ask us, what did we make of the opportunities that we have? And we also don't have infrastructure problem. Infrastructure can reduce dependency on correspondent banks, but it does not solve policy harmonization framework. And we are the one that can solve that as well. Even as cross-border transactions grow, then we need to talk about trust. Across the room, we've talked about data flows across Africa. Ultimately, what will determine the success of all of this is the trust elements, where the participants can confidently say, look, I can do transactions across Africa. And the focus lens will be reducing cost. Because as long as we are going through correspondent banking, we will have increased cost, reduced liquidity. Because when the institution sending the funds maxed out their limits, you have to join the next queue. And it's not visible to the consumer. So we have to unite, we have to be unanimous and be deliberate and also intentional in growing from fragmentation. We just want to show that, okay, this is my country, just show the flag. We got to go beyond that. We have to ensure that larger economies may gain more volume. However, the smaller economies that we created through the fragmentation can also gain as much, as long as we create faster settlements, greater access, increased participation in regional and global trade. We cannot look for help from outside Africa. The help is from within us, and that is possible. Thank you.
Thank you very much, Mrs. Folashade Femi Lawal, and also to thank all our panelists for their very insightful introductory remarks. I want to start quickly with a question to Professor Aremu. You're a development economist, you're an academic, you regularly advise various government agencies. The paper that was presented argued that Africa's challenge is fundamentally one of systems integration rather than trade integration alone. And I remember in your introductory remarks, you listed a lot of things that you felt needed to be done. My question is, if you're advising African leaders today, where would you say, about that long list of things that need to be done, where would you say, why would you advise them that they need to invest first to have the highest economic returns, the payment infrastructure, digital infrastructure, the training? You listed a lot of things. Which of these would you say should be approached first? In other words, the sequence of the reforms that you think need to be done.
very much, moderator. You want the priority in terms of investment have to be put into cross-border payments. First and foremost, I make a brief comment before I started identifying those problems and how to solve them, and then do list you mentioned. In ECOWAS Commission, we already envisage a single currency, ECO. But the secondary and primary conditions were difficult. I will let them know that it's going to be difficult. As a consultant of that project, I told them, and then after some time, by 2009, ECOWAS agreed that we are going to go through ECOWAS payment and settlement system. Now, July 2023, all the heads of state agreed that we are going to enter our single currency, ECO, through the payment system. But before that time, PAP has already come up. Now, so first and foremost, we need to be able to make sure that our monetary cooperation program, under which we agree to have a payment system, should actually equally be followed, but later on integrate it into Pan-African payment and settlement system. And then I know that they equally have their own, but then have their own payment system. So, AfCFTA has done a very wonderful job. But again, because of the fact that African continental free trade area is to make sure that they connect the REX, I think that AfCFTA will help us by making sure that other REX that have not been able to have their own payment system, we have it and then we connect all the REX payment system. Now, in terms of individual REX, in ECOWAS, I know our own problem. Our own problem is the one which I identified. There are quite a lot of them. In terms of many of our members said, they are not already having all those technology. So, and one very important thing, which is the last point I mentioned, is that the issue of financing. There's a lot of financial gap to be able to get all those things in place. So I will suggest that our member states, throughout all the 8 RECs, should make sure that they look into all those things which I mentioned and pay attention to be able to put a lot of investment in them so that there can be interconnection with AfCFTA is equally working towards. But right now, many of our RECs are not actually prepared. There's a lot of investment, and I make mention of all those institutions that have substantial money to be able to get that one done. Thank you.
Thank you, Professor Remu. I want to now move to Mr. Cardoso. In your opening remarks, you are giving some very insightful, illuminating examples from other regions in the world that we can learn from in Africa. And I want to use Europe as an example. As a regional integration expert, to get your thoughts on this. Europe's integration journey, from what I understood, teaches us that institutions matter as much as the markets. But from where I sit, I think Africa already has lots of institutions already. We have the AfCFTA Secretariat, we have AfCFTA, and by the way, Professor Remo had endorsed AfCFTA twice in the last few minutes. I want to just let you know that that was not a coordinated plan by the two of us. But back to Mr. Cardoso, like I said, we have several other institutions functioning. We have the AFDB, we have AfCFTA Bank, we have the African Union, we have so many regional economic communities, all playing important roles. So we have a lot of institutions already. Do you believe that it is really an institutional, is it a problem of institutional coordination since the institution actually exists, or do you believe that it's still more of a policy challenge? And what governance model would you, from your experience, would you suggest that prevents fragmentation while at the same time respecting national sovereignty, from your experience, how other regions have done this?
So, you are questioning me. You are questioning me.
Yes, Mr. Cardoso. Should I repeat the question?
My point, the point that I didn't make, I will make with your question. My point is that as far as regional cooperation and integration follows and agrees with the interests of domestic groups, elites, and coalitions. So regional cooperation and regional integration will proceed. If it does not coincide with the interests of those that are in the countries, it will not follow. I have lived the difference between SADC with two Cs and SADC with one C. Southern African Development Coordination Conference. It was not a regional cooperation, but it was an example in which all the countries, there was a common enemy, apartheid. There was a lot of external support, but there was really a work together of the countries, building building infrastructures that served to all of them. And that proceeded very well. When SADC with two Cs transformed after the Cold War in SADC with one C, SADC ceased to function. SADC is an inoperational organization. Okay? So my point, answering to you, I don't know whether I answered to your question, but this is my opinion. The regional goes better if it represents the domestic interests. And this is the more important and interesting thing. If we look at Africa, we can see, look at North Africa. In North Africa, please do not tell me about regional integration. Why? Because politically, those countries, they do not look to each other. Okay? Look at Sahel. Don't talk me about integration in the situation that exists. Look at Central Africa, DRC, Central African Republic. What's happening there? My point is that the domestic conditions, domestic situations are what should be looked at by regional institutions if they want to prosper. If not, it will be meetings, it will be speeches, it will be decisions that some will follow and some will not follow. So my point here, and I'm not speaking here, I'm speaking against most of my colleagues in universities in Europe, because they are completely enthusiastic of the trend for regional integration in Africa. But Southeastern Asia developed and never, until today, followed regional integration. Europe followed regional integration because it constructed first development basis for that. And we are trying in Africa. I'm not saying that this is wrong. What I'm saying is that we cannot build a house from the roof. We have to look to domestic situations in the countries and interests. And regional integration has to proceed according to this. This is my opinion.
Thank you, Mr. Cardoso. Thank you very much. Moving quickly to Mr. Itopa, I want to get your perspectives as a central banker. I think most of us will agree that central banks face a delicate balancing act. They must enable innovation, while at the same time safeguarding monetary stability, cybersecurity, financial integrity. And we have also argued here that interoperability is also very, very important. But as payment systems become increasingly interoperable across borders, which is what we are trying to get to, and we feel is very important, how do you advise that regulators like such as yourselves can avoid creating either excessive fragmentation or excessive centralization? In other words, where should the regulatory balance lie?
Thank you very much. I had said that for us to progress in Africa, we need to work with purpose. When I made my first remark, I laid out the 4 entities that I think should be cooperating together. And if those 4 entities don't cooperate together, we may not have the success that we desire. We have a situation today where a Central Bank of Nigeria, for example, is operating on a pedestal that some other African countries cannot connect to. So if you want to integrate the different system payment infrastructure across the region, they must maintain certain minimum requirement. And that's not the situations today. How do we solve this? And that's my concern. The regional economic communities have to come in. For example, ECOWAS. There are 15 countries in ECOWAS. Why can't the countries in ECOWAS come together as a bloc and begin to refine their regulation and standardize it as a bloc? Then the eastern region will come in, the northern region will come in, and all together we can pull to the center. Today, if I take my passport, my ECOWAS passport, I can go into any of the ECOWAS country free. And nobody's unhindered, nobody's going to interrupt me. But today, if Central Bank of Nigeria license a payment service provider, a fintech, it cannot take that license to go and work in Ghana, neither can it take it to Sierra Leone, and we're in ECOWAS. So license passporting has to become a major consideration out of this discussion, where once one country has certified that a fintech has met the minimum requirement as agreed by all the bodies within the region, it should be good enough to passport that institution to those countries. Nigeria also will have to come in because we have a very formidable payment infrastructure. We are first in several fronts, in central bank digital currency, in instant payment. We need to handhold some of the other African countries to rev up in terms of their payment infrastructure so that all of us can connect. One of the bane of the PAPS implementation today is because all of us are not operating on equal pedestal, and that is very, very important. So AfCFTA as a secretariat has to come in because it has the mandate of all the 54 countries in Africa to direct that certain behaviors happen among the entities that are operating within the Pan-African payment and settlement system. That would just be my final thoughts.
Thank you, Mr. Itopa. Mr. Owosu, I think we all agree that fintech has transformed domestic payments across Africa, but the truth is that relatively few of them, relatively few fintech platforms operate seamlessly across multiple African jurisdictions. From an operator's perspective, what would you say is the single biggest obstacle preventing Africa from creating a truly continental digital financial services? In other words, if all African regulators called you today and said that they are prepared to grant you one wish and it to be granted tomorrow, what would you say will move the needle the most?
Thank you very much. Firstly, to avoid the two-tier financial specs. Actually, two-tier financial specs means, to avoid two-tier financial specs means ensuring that the digital integration does not favor mostly advanced market or advanced institution or advanced consumers. So, and in order to do this, the first thing to do is to look at creating an access, inclusive access. The integration should not focus mainly on or build around the smartphone or build around the strong internet connectivity, because everybody in Africa don't have access to internet connectivity. Everybody in Africa doesn't have access to smartphone. So we should also look at products like USSD code, using the agent network, merchant network to reach the last mile, those areas where, or maybe people where their income is not too strong, who cannot afford smartphone, and the areas where there is not a lot of internet connectivity. And then the second one is the harmonization of regulation. Different regulatory framework in Africa shouldn't be a barrier to trade in Africa. It shouldn't be a problem. Rather, and secondly, the harmonization too should not be looked at the bringing low the bar. So what we are saying is, in as much as they are harmonized, we are recommending the harmonization of regulatory, there should also be safeguard in terms of fraud and other things through KYC, strong KYC process. And then the lastly is interoperability. So the interoperability should not be focused on the industry. It should focus mainly on the users. So someone who is maybe in Lagos or maybe in anywhere who wants to do transaction shouldn't have that. Not everybody has the understanding of the payment networks or the regulatory framework of different African countries. So this shouldn't be a problem to them. So the principle is simple. Regional integration should not create fast lane for few and a slow lane for everyone else. It must be designed to make more people and business to participate safely and benefit meaningfully. Thank you very much.
Thank you very much. My final question before I open it up to the audience for questions, to Mrs. Folashade Femi Lawal. Global payment networks have decades of experience connecting markets across jurisdictions. And as Africa tries to develop its own platforms such as PAPS and so on, while also leveraging global payment infrastructure, how should the continent think about this relationship? From your perspective, do you see this as competing systems? Are they complementary systems? Or are they different layers of more or less of the same ecosystem? And how can Africa ensure that the interoperability that we're talking about ultimately benefits businesses and consumers across the continent of different sizes and not just those in the largest markets?
Hello. Okay. Thank you very much. The way I will approach that will be, from Mastercard perspective, our mantra is we empower people and we power economies, and then we build sustainable business where every participant prospers. So the way to extend prosperity across Africa, for the lack of a better word, will continue to be integrated policy framework. We need to harmonize policy framework. We can't overemphasize that. And from a global perspective, what we promise is we will reduce dependency on correspondent banking relationships and also give access to global markets, while recognizing that infrastructure alone is not enough to solve the problem that we have at hand. But we know that you need trusted cross-border data flows. We also come in from that, leveraging our 6 decades of experience across 200 countries and territories. We have connected consumers, businesses, financial institutions, and governments. We work with central bank regulators and ecosystem collaborators, where we can advance interoperable payment system. We can also strengthen resilience through AI-driven fraud intelligence and cybersecurity, and also to support a digital economy where we can match innovation with trust. And most recently, just last month, our global CEO was in Nigeria and across Africa, where we launched this Africa Cybersecurity Center of Excellence to reflect that commitment, because we recognize that as cross-border commerce grows, we must strengthen cyber resilience, which is one of the biggest elephants in the room facing us as ecosystem, as industry. We need to deal with that. And we are available to share that expertise and also to help safeguard the integrity of Africa's digital economy. Because ultimately, the regional integration we've been emphasizing will be measured by how confidently businesses can participate in the opportunities, faster and more connected payment creation. And because if we work across the aisle to build trusted and interoperable and inclusive financial infrastructure, we will do more than facilitate transaction. We will unlock trade, strengthen competitiveness, and create shared prosperity across Africa. So we won't talk about whether it is fair or not. It's actually transparent across. Thank you.
Thank you very much for you. Once again, I want to I think we should give a round of applause to all our panelists for the way they excellently answered all the questions. I think we have a few more minutes for questions to the audience. We have 4 roles, and to make it more efficient and scientific, I think I'll go from role to role. I'm going to ask one question for every role, so please raise up your hand. I want to encourage you to ask your questions directly, as short as possible. Please, no statement, just go straight to your question, and also indicate which of our panelists you are directing that question to. I'll start with the first role to my left. Yes, please.
Thank you very much. My name is Professor Aliu Rafinda Sanusi, Ahmadu Bello University, Zaria. You see, I think there is something we also need to think and ponder about whenever we're seeking cooperation such as this. Greater interoperability, for instance, in the case of this integration, is what appears to be what we want, or we're asking for. However, it comes with some, let me say, revenue loss, maybe in the form of payment gateway fees for centers that are already established, financial centers. So asking for this integration without deliberately having incentive embedded in it, it may go much as the other corporations that are dragging too long to be practically operational. Thank you very much.
Thank you very much. I think that was more of that was a perspective. Thank you for adding to the discussion. Can I just ask you just a quick question? You mentioned incentives. Do you have an idea? What kind of incentive do you think will be applicable in this case?
You know, as they are speaking, so I'm thinking, it's not that I have sat to, but this is the point I'm making. For instance, South Africa, Nigeria already have, some revenue. You see, the point Cardoso was making about the local conditions, the incentives, what do the locals really want? That is what made me think of, okay, so what am I losing and what am I gaining if I'm to allow this interoperability? So that's what I'm thinking.
Okay, thank you. I think that's
more for us to think about, yeah?
Yes, I think that's more of to a question to Dr. Onyekwena. I guess he's saying that further research has to be done to identify those incentives. Well, thank you very much for your perspective. Any questions on the second row? Yes, please.
Thank you very much. Thank you. I thank the panel and the organizer to invite me here in Nigeria, this lovely country. I'm Dr. Bakari Samba, the president of the Timbuktu Institute African Center for Peace Studies, based in Dakar, Bamako, and Niamey, working in several issues like security and integration. Okay, I think that is a good place for me, and I have an opportunity, as an ECOWAS citizen, hearing about the upcoming common currency in our space, in our political regional space, as we are also in Nigeria. Do you think that it is a good news for regional integration? And what will be the prospect from your perspective, your perspective and your understanding for this new currency? It will be a good opportunity to facilitate regional integration and also to develop the fintech. I would love to hear from you, as also we are in the Central Bank of Nigeria.
Sorry, who are you directing the question to Mr. Itopa from Central Bank? Who are you directing that question to? Who would you like to?
Yes.
Okay, you want me to open it? Is there any member?
Preferably to some people from the Central Bank of Nigeria.
Okay, Mr. Itopa, yes, I think you have been nominated, and I think Professor Ramu
the new currency and the perspective, the prospect for our region.
Mr. Etopa,
Thank you.
Please go ahead. Can you please repeat the question? I think panelists did not. Sorry? Okay. If you don't mind, sir, can you please repeat the question? I don't think it was loud enough for the panelists.
As we are discussing fintech, regional integration, and trade in the region, and as an ECOWAS citizen, I hear about this new currency which will be launched next year from the news I heard. What do you think that it would be a good opportunity for our region, and technically and practically, as in the region we have different currency, we have the franc CFA, we have also the Naira in Nigeria, we have the CD in Ghana. What will be, what do you think about this integration? It will be something easy, or it is, we have some relevant stake also? Or
I think what I'm hearing, and correct me if I'm wrong, is how realistic regional integration in the financial integration in the Francophone area. I think that's what I heard. Am I correct? No, I'm not.
We were talking about the ECO, the new currency of ECOWAS.
Oh, the new currency of ECOWAS.
Yes.
Whether
okay,
it is
and
practical.
You are talking about fintech.
I see. Okay.
What are the prospects for our region and for our integration?
Okay.
Thank you.
Yes. You want
do you want me to respond?
Yes. Yes. Thank you.
Okay.
Thank you very much. My name is Kalilou Traoré. I'm the ambassador of Côte d'Ivoire to Nigeria. I'd like to thank all the panelists, and particularly Professor Aremo, who know very well ECOWAS because we work together at a certain time there. Of course, there are many efforts to facilitate the integration on payment system. You mentioned the AfCFTA initiative and the ECOWAS initiative. And there are also many private initiatives trying to transfer money from one country to another. But most of them, they are facing some of the challenges. Maybe I would like to hear from Professor Rumu and other panelists on that. The first thing is the regulation from the central banks, reducing the transfer of the money. There are a strong regulation, central bank of CFA or central bank of Nigeria or Ghana or so. The other thing is the pricing. When you want to transfer money from one country to another, you have to pay very high level of commission. So that's also one of the challenges. How do you think that we can also think? I think I would like to stop on these two main challenges. Just one word about the ECO. Of course, during the recent summit of ECOWAS, the head of state decided, as already indicated, to launch the ECO on 2027. It doesn't mean that in January 2020 we will have ECO notes on the market. No, it's a launching. And then there is a full process that can take some time, even some years, before we can see the notes on your wallet. So the ECO may resolve many of these problems because there is a regional committee of central bank governors who have to address different issues when it comes to the rate, when it comes to the headquarters of the central bank, when it comes to even macroeconomic convergence criteria, and many things also have to be done that are not yet done. So there are a lot of challenges now. Many initiatives, I received many companies saying that we want to send money to Côte d'Ivoire. We already have the infrastructure and it's working, but the price is very high. So how do you think we can manage this kind of challenge? Thank you.
Thank you very much, Ambassador, for your intervention. I think many of us might already realize that Ambassador Traore was the former commissioner that was in charge of the ECOWAS payment system. So we thank you, sir, for your first-hand expertise and your knowledge. Thank you for your insights. We'll go to the third row we'll take, okay, we have a few more minutes. We'll take a couple of questions from row 3. There are 4 hands up. Okay, can we start with the one at the farthest row, please?
Thank you. Dr. Ndunwokolo from Next Year. So first, I have to say big thank you to Dr. Cardoso for bringing the issue of strong and effective state into the discussion, which I felt was missing. Again, my question is around the issue of Afro-nationalism, terrorism, and all kinds of insurgency that we're witnessing. So are we looking at a situation where this deepening of cross-border trade or cooperation is only among big corporations and it's all about services? What about trade that has to do with moving of goods and informal trading? And when you look at all these things and you do not consider the issue of insecurity and policing within these countries, then we are just discussing one aspect, because I do not think that Fintech alone can do it. It's not a standalone, it's holistic. So we need to bring a political analysis, political economy analysis into this whole discussion for us to understand how this will work and how we can move it forward. Thank you.
Thank you. Again, I don't think that was was that a question that you directed to someone, or I think it was more of a comment.
It's a comment, but yes. I think Professor Aremu can take over that because
absolutely,
he's a professor of economic
Professor Aremu. They said, "Do you want to react to his comment?"
Thank you.
Take this.
Thank you very much. I think I'm privileged that my former commissioner in ECOWAS has spoken. That's Commissioner Traore. He's on a higher level as assignment from ECOWAS now. He was actually in charge of ECOWAS Monetary Cooperation Program, and the ECOWAS payment and settlement system moved very, very fast under him, so that by 2023, we had a law in ECOWAS. But back to your question on the issue of the various crises we have in ECOWAS. The entire global economy is not at ease. So it's not only ECOWAS. So, and that will not actually deny us of moving ahead to be able to do what we need to do. So, including many parts of African countries also have certain kind of problem or the other. So I don't think that the problem will deny us of what we need to do. So, but what is very important is that every of the map out programs, let us see what we can do at individual economy, at regional economy. This payment system is very critical. And when ECOWAS was just on free trade area, they recognize it. But ECOWAS are graduated to customs union now, and then inside African continental free trade area, which is higher than AfCFTA. That is where we're operating. In fact, we enter AfCFTA with our customs union position. That is to say, we have a lot of commonality, particularly the common external tariff, which is the basic thing under a customs union. Quite a lot of other regs, they have not reached that stage. And thanks to our commissioner that is there, those are people that actually make the thing work. So what I'm saying as much as possible is that what we have actually achieved, let us use the continental payment system to be able to raise this higher. But again, we should not actually subject our ECOWAS Monetary Cooperation Program to the continental level alone. Because if we say, oh, perhaps they're already coming in, and then we forget our own something, are we saying that what our head of state can no longer work? So as much as possible, the various monetary policies are an object of Central Bank of Nigeria Research Department. I retired from here, so I'm back home. So the various things that we need to do is to make sure that our national domestic policy is fused into the regional programs, and then the regional program goes into the continental. When you open everything to the continental, anything that happens there will now affect your own domestic economy. So as much as possible, Whether it is regional crisis happening here and there, it's not enough to stop us from moving ahead. Thank you.
Thank you, Professor Ramo. Can we go to the next row? We have a gentleman sorry, before we go to the gentleman in white on this row, in the interest of gender balancing, we'll go back to row 2. Okay, we have, please, yes.
Okay, thank you. Lourdes Casanova from Cornell University. If we look at the world, we see for mobile payments, we see Brazil with PIX, launched by the central bank, really successful. India, UPI, the digital public infrastructure. And China, strangely enough, dominated by 2 private companies, which are Pay and Alipay. My question for the gentleman from PalmPay, why so much fragmentation in Africa? Here in Nigeria, similar market as Brazil, you have PalmPay, OPay, Flutterware, JumiaPay, etc., etc. So why so many? And will this be good for the country? So if in one country you have so many, some of you are in Tanzania, which other country you are besides? In 2 countries only, no? So then how are we going to go from this fragmentation to digital payments across the continent?
Thank you. That's an excellent question. Yes, Mr. Amosu.
If I get you correctly, you are asking why we have PalmPay in Nigeria, we have in Tanzania, and we have in other countries. Okay. Okay, actually, okay, if I'm to come to that, if you look at the Nigerian population, we have the population of over 230 million people. And if you look at, as at 2019, or before now, you look at the exclusion, it's almost over 68%. So that means we need this PalmPay, OPay, MoneyPoint, and the rest to meet up with the demand of ensuring that we bring in as many people as possible to the formal economy. I don't know if this has answered your question.
Okay. Do you want to take another stab at it, or you are convinced with your response to the question, even though she's not convinced with the response?
Okay. Or are you saying
anybody else want to?
Opening?
Nigeria, similar population as Brazil. Okay, huh? Yeah. Brazil, 1. PIX. China, huge. 2, which are Pay, Alipay. India, mainly UPI. Huge population. Why so much fragmentation here in Nigeria? And will this fragmentation be conducive to
CPN will answer this question,
integration of mobile payments in the region?
I think Mr. Etokwa from Central Bank wants to attempt to answer that question.
I thought he was going to say, I didn't license myself, Central Bank did. And that would have solved it. Yes. I think you are doing, the comparison isn't right. You are comparing mobile money operators to a central switch. The PIGs, the UPL in India, and our national central switch operated by NIPS. These are the ones that you should compare. PalmPay is a mobile money operator providing e-money to the Nigerian citizens to operate wallet. So that would have been a different comparison. So we have some of these operators in different categories. We have mobile money operators. We have people that provide switching and processing. And the mandate is to provide digital financial services to the nooks and crannies of this country where you don't have branch presence. We have situations where banks are closing their outlets. They are not present in the nooks and crannies of the country. We came out with mobile money operation for them to provide wallet services at a very lowered KYC requirement. That was the reason why we licensed, I think, about 18 mobile money operators to operate in the country. So it was intentional for Central Bank to ensure that we license more operators so they can go into the nooks and crannies to promote and deepen our financial inclusion requirement.
I think she seems a lot more satisfied this time. I'll go back to row one. I think I saw two. Again, I'm trying to be two of our women. Yes, please. I'll come back to row 4 and 5. I just want to take a couple of questions.
Thank you so much. I'm also bringing this question to the attention of the Director of Payment System. As Africa seeks to deepen regional integration through cross-border payments, like the Fintech, infrastructure, and policy coordination, could a reimagined barter system supported by digital platform like blockchain and AI serve as a complementary mechanism for expanding intra-African trade, particularly when you think of the fact that for SMEs, most of them are facing foreign exchange and payment constraints. Thank you.
Again, that's more of a comment. No, is that sorry, who was the question directed to?
Director Payment System. I wanted to know.
Please, Mr. Tokpa, please.
Thank you very much. I guess. Thank you. It's Bank of Nigeria. This is a technology that is being explored, and the Central Bank of Nigeria is actually promoting it. Now, the entrepreneurs are promoting technologies that runs on blockchain. About 3-4 years ago, we launched our e-Naira, the central bank digital currency. Is also on blockchain. There are so many applications today in Nigeria provided by banks and fintechs that leverage AI, customer services, and all of that. So these technologies are being supported by the country. Let me say the country because the central bank doesn't regulate technology. Science and Technology Ministry will actually do the regulations. But once you put financial services on top of this technology, then central bank is interested to see the risk inherent in those technologies. So today, as we speak, we have some of our payment infrastructure that is running on blockchain and on AI. And perhaps already has a template, in fact, a roadmap of how it will migrate its entire payment infrastructure on blockchain. And just like you rightly observed, this will create a lot of stability and prevention of losses through data breaches and all of that. So it's a technology that is welcomed by central bank, and I know it's being promoted by PAPS too. I hope that answers your question.
Thank you, Mr. Tokpa. One more question on that row before we move it. Yes, please.
Thank you very much. My name is Aziz Mlima from Tanzania. My question is directed to the Central Bank of Nigeria. Regarding the single currency for West African countries, ECOWAS, you have quite a number of central banks which are running separate monetary policies. How are you going to consolidate the single currency monetary policy while you have different systems, different countries operating their fiscal policies and monetary policies for each country? Thank you.
Well, I guess that's where the regional economic communities would have to come in. Like in my presentation, I mentioned that we have different blocks. We have the ECOWAS, we have the COMESA, we have the CSEA, and all of that. For ECOWAS, for example, it's very easy for us to do it. We have about 15 countries in ECOWAS, and we're already cooperating. What we just need to do is to handhold one another so that we can come onto a technical level that is good enough for us to interoperate. We can do this. What PAPS has done is what we are going to miniaturize to our regional level. There is already a project called ECHO, setting up a West African currency called ECHO. And it's very easy. Today, if I take my Naira to Ghana, Ghana takes my Naira and they give me the cedi equivalent. So there is already an exchange rate. But dollar is not involved. And that's basically what we are trying to achieve, that I should be able to buy goods and services from someone in Ghana, and someone in Ghana should also be able to buy something from Nigeria using its cedis. And that's why the importance of this single currency within the ECO region is very, very important. If we do that, then the pressure on our various, each country reserve would come down, because you don't have to depend on that to settle inter-regional trades. So it's ongoing. I don't have the update in terms of where we are now, but I know it's something that has been considered. And just like everyone said, if we start at regional level, we'll be able to quickly ramp up to the international level. So I will support that ECOWAS solve its own problem, and then we connect to the intercontinental level. Thank you.
Thank you, Mr. Dr. Professor Remy wanted to add something to that very quickly.
Yeah, just a little addition that, to that question. ECOWAS have its monetary cooperation program, right? Initially, it was to be implemented under primary and secondary conditions. But ECOWAS later on, and my commissioner, who was directly in charge here, now discovered that we now have to go through a payment system. That is to say, if this thing costs $5, this $5 has an equivalent in Naira and in CD. If I'm buying it from Ghana, they can debit me in Naira and credit Ghana in CD, and then I'm paid, right? No, it's $5, but it's not equivalent in those two currencies. That is the essence of payment system. And the central bank or members say we be networked in a way in which at the touch of a button, you can make your payment easily. The same thing at Pan-African level. We now use that approach to be able to get to its own echo. And they are working towards it. I was lucky to be in the last convergence meeting, and quite a lot of chief executives of YFM and other institutions are here, and they are moving, and the governor of central bank also, they were actually there, or the governor of central bank in ECOWAS. They are moving ahead to be able to implement this. That's the payment system. And that payment system, obviously, will be easy to fuse into Pan-African payment and settlement system. In that case, the monetary policy of our members say will already be harmonized at the regional level before going to the continental level, and that will make it easier. And I think that a lot is being done to be able to make.
Thank you, Professor Remo.
Thank you.
Unfortunately, we have run out of time. I have to apologize to several of you who wanted to ask questions. I was unable to get to you. Very, very sorry for that. But we have to close immediately. I want to thank all the excellent panelists we have had, including our paper presenter, Dr. Onyekwena, for his insightful paper. Thank you to the audience, all of you that for your insightful questions. And I wish us a productive remainder of this forum. Thank you very much.